Starting with the US dollar here, we're seeing the dollar push up, which can make indices and commodities and other FX pairs push to the downside. So we've been looking, if we just go back to the larger picture here for a moment and go to the daily chart. So what we're looking for here is that we know we've got 5 waves down, so we've been looking for an A and a B and a C wave to the upside for wave B, and then moving down at that point. Now this ABC here, that's a smaller version, or we could end up with a larger version here as an A and a B and a C wave up here at the 50-60% retracement level here. So I'm not sure which one we'll get, but basically looking at everything, it's this one here, and based on that, this wave here of A here, we should get some sort of equality over here. That will take us to 105. So coming back onto the intraday using tick charts on 2K tick chart here and looking at it like this. So we'd been talking about the length of wave A here, giving some sort of equality to this one over here. So that would bring us in around the 105 here. This is a CFD product, so it's slightly different pricing, but that's it. How to count this up here, I need to put a little bit of work into that. I need to look at the other pairs because it's just a little bit dodgy in here. Anyway, the main point here is that this length of wave A here, not that they have to be perfect, but they have to have the sort of right look and feel about them, you know, and we're sort of we're still a bit short here on this. So yeah, we need to push up a little bit higher. I mean, at the minimum, it would be this here with one more high to go in, but I just think we need a bit more, you know, more to the upside at this point. So not there yet with this. I just need to give that some thought. I think on the Australian dollar, we're looking at this being wave 1 up here, so we've probably got wave 1 in here now. Anyway, I'll look at that when I do the FX with the Australian video and the other one. But basically, this is pushing up, and we can see the stochastics here is sort of reloaded here and just set on basic settings, and that's flowing okay in that regard. So that's definitely going to put pressure on those markets. So we could see something like this, and then pushing up at that point. I'll just have a quick look at the Aussie. That will give me a good idea of what's going on. The Australian dollar here. Let me just clean this. Yeah, so I was looking at, so this is the same pattern in reverse. So we've got 5 waves down, the A wave, the B wave over here, and the C wave here. Now, it's possible that we've either got this as wave 1 or wave C here. We've got that low in place. I'll just need to adjust these here. So that means that, yeah, so, I mean, it's possible to have the low in here, that because I've got 1 and 2 here. If I've taken this low, I've taken that low out, so that's okay, but still it's a little bit short compared, this is a bit short compared to this, but it's okay to be a little bit short. So maybe the dollar's got a bit of a top in there, we'll see. But from that point here, we've got 1 and 2 and 3, 4, 5, so that's all pretty clean. So we can have wave 1 here, and we can go back for wave 2 here, and then go down at that point for wave 3, 4, and 5 at that point, which should probably be about right, you know, looking at it. So something like that. So the reverse of this is wave 2 pulling back. If we go back over here, we can put this wave 2 back in just here. And yeah, because it's a bit spiky in here, I've got to kind of figure that out a little bit. So that would still give us pretty much what we're looking for up here. So it's quite possible for the S&P to do the reverse of this, right? So that's what we've got to take on board. So looking at the Australian dollar, it's possible to have a top in here of wave C of B, but it does leave it a little bit short. Otherwise, we're going to be pushing up here for that a little bit higher up here. Okay, so that's that in a nutshell. So looking at just move my video recording stuff on the side. So for the S&P here, we've been looking at it as wave 1 and 2 and 1 here. So we'll look at this as wave 2 to pull back here, so that a pullback into here before heading higher. Obviously we can buy new highs, so let's just cruise in and just check on this a little bit. So yeah, I thought we may be going into a bullish move from here, but that's not the case. So we'll need to treat this as one, an A and a B. You could probably WXY all this is probably a better call, but I like to keep things pretty simple if I can. So basically we need to pull down to the 4,000. We need to retest the 4,000 at this point, especially if this low here is breached, which appears that it will be breached at this point. There may be a kickback from that, but we'll take a closer look at that. But in a nutshell, the A wave, the B wave, and the C wave down here. So the alternative count for this on the upside here would be this. So we could look at this as wave 3 and 4 here, or we can actually also look at it as wave 1 here and wave 2 here. This is my 10,000 tick chart here where I keep an alternative bullish count. But we could count that up for 5 waves here, so we can look at that as wave 1 and 2, but we don't want this low here being breached. You know, if this gets breached here, which it looks like it will, then it's over at that point. I can't see anything else on that, so would end up looking at this. I won't reverse it here. I'll just go to the 5K tick chart here and look at it like this. So wave 1 with the A and the B to here or to here, that's a bit debatable at this point. I mean, because after all, that had a bit of a spike in it, so I sort of wonder about that. I don't like spikes, I mean, from news events, but either way, if this low here is breached, then this, whoops, that low here, then that does give it and I've just sort of squared this up with some trend lines here, a little bit basic, I know, but being a bloke, being a bit basic. So just sort of looking down here, getting some sort of equality in terms of this move here. You know, this, even though it's, you know, did a bit of a dog leg here, that's the distance. So wave A and wave C having a bit of equality to them, so you know it'll find support down here. Obviously the 4,000 is support, the 50-60% is down here lower, so we'll just have to see how the structure plays out, and I'll also have to have a sort of compare it to stock as well. So in terms of being long in this market, the only long trade would be above the previous high. That would destroy any bearish count that we would have at this stage on this. So I'll just leave it like that. If this is breached here, it will be a struggle here, of course, but that would be the long trade at that point. I mean, we could probably look at it, if I ignored that spike, I could probably look at this as wave 1 here with an A, B, C back here for wave 2 tucked in here. But that kind of sorts out that if this top is breached here, then you can go long from that point, you know. So that's the S&P and the what's the name-ish. This is the NASDAQ here. The same thing applies here as well. It's possible to have this as the ABC down here for wave 2, and then look at this as wave 1 up here, and then an A and a B and a C back for wave 2 here. So this would come down, take that low out here, would need 5 waves in here and then move up. So that would be the long trade, but otherwise we can come down here further in a 5 wave sequence here before moving up higher. I mean, the takeaway with all of this, by the way, just in case you're sort of getting into a bit of a bearish spin, we're all emotional beings, this block here is corrective in nature. Right, so it means that whatever happens with the rest of this here, it's all part of a corrective move, bullish corrective move. Okay, so that's the takeaway. That's where we go long. This is where it could pull down to. At the same time, the whole pattern is bullish corrective, and it's a bullish move, and it's a, as the young bloods would say, it's a buy the dip situation. And over to the Russell. So it's holding up quite well here. I can look at this as, I mean, it's a pretty scruffy move up here, but you could wingle 5 waves out of it, and this would be the wave 4 here, and then the wave 5 up here, all of that sort of thing. So we can look at it as wave 1 here. We could put wave 2 here. We could put wave 2 over here. We could do this. We could do that. But at the end of the day, that's the high that you would need to go long on, and that would keep you safe, because there's a possibility that we can come down here. It's possible to count this as 1 and 2 and 3 and 4 and 5 here as a 5 wave structure. It's possible to count it as an A and a B and a C wave here too in that case. The spike here, depending on how you want to include that in the count. But at the end of the day, that's where we can go long now. And at the same time, we just need to be a bit mindful of this coming down here further. We could also look from this low to this high here and understand where the 50-60% retracement level would be in here. There will be support there, no doubt, and the market could go up from there. This could be an A wave, a B wave, and a C wave here, and then move up. I'm not quite sure, but I do know that's where you need to go long from, okay? Because we've already tested it twice up here at the 50-60%. So if that's breached, we can go at that point. And the DJ here, if this low here is breached, then we'll have to look at this as the A wave here, the B wave up here to this high, and the C wave coming down here and then moving up from that point there. Once again, the move up here for the DJ off the low here is 5 waves, right? So this would just be an A, B, C pattern here and then moving up high. So the bigger picture is bullish, the shorter term is bearish, and that's about it in a nutshell. And yeah, it just comes back to well, it comes back, everything is connected, so I can't say it comes back to just one thing, but we have been using the US dollar as a bit of a guide stick to navigate this situation. Alrighty, I'm going to leave it at that. Thanks for tuning in, and enjoy the weekend. Cheers.